If you've been wondering if you're being too conservative, having healthy exposure to bonds and even cash while stocks continue to climb higher and higher doesn't necessarily mean that you're doing anything wrong. There's been some research and even a lot of chatter online recently about 100% stock portfolios, even in retirement. You might see people talking about this online, and sometimes they even acknowledge that they've got a huge pension and social security income, for example, maybe big cash buffers, or maybe just way more money than they're ever going to need. But that's not always the case. Now, as an advisor who's worked with people for over 20 years, I've seen a lot of real retirements up close. And what a lot of those conversations just miss is this. Most of the people who have had wonderful retirements are not 100% stock, and they might not even be 80% stock. Now, yes, especially in recent decades, a lot of those people would have ended up with a lot more money if they were more aggressive. That part is true. And watching the market continue to rise while you continue to play it safer can feel like watching a boat sail away from the dock. The law of averages says that taking more risk would probably work out in your favor. But you don't get to play the averages. You only have one lifetime, one sequence of returns. So the real question becomes, what are you optimizing for? If your top priority is maximizing your legacy or charitable giving, then yeah, it might make sense to take more risk, assuming that you're okay with the trade-offs of that, the potential downside. But if the goal is just more points on a scoreboard, then I'm not sure that that's the best approach. And maybe this isn't you, but I've seen a lot of people who are financially secure, no real risk of running out of money. Kids are going to be fine, never want for anything, but they still feel the need to keep pushing for more. Not because they need it, but because the habit of optimizing is so hard to let go of. And that's fine. It absolutely is. As long as you're clear on what you're doing, no criticism. But I would encourage everybody just to try on the statement, "If you've won the game, stop playing," from William Bernstein. You see, in all my years, I've never seen somebody fail to retire because they took too little risk. But I have seen people take risks that made them miserable or made them panic at exactly the wrong time. And remember, the markets could have gone the other way in these recent decades here. So who knows? Nobody knew in advance exactly what was going to happen. So if reducing risk helps you sleep at night, then that's important. Just make sure you run a plan so that you understand what the trade-offs are and what you can realistically expect out of your savings and your strategy. And if you're really struggling with the thought of missing out, think of it as a cost that you're willing to pay. The cost of fewer sleepless nights, or the cost of not checking your accounts every time the market goes down 2%. The cost of staying calm when everybody else is worried about their savings. You could even argue that those safe holdings aren't necessarily putting a drag on your retirement. They're actually helping you do better over the long term. If having some cash, reserves, and bonds helps you stay invested during those market downturns, or even just get invested in the first place, then you might end up doing better over the long term than somebody else. Now, all of this just assumes you get decent returns from balanced investing, which could happen, and that downturns are temporary, could also be the case, but there are just no guarantees in any of this, as you know. This also assumes you don't need big market returns in order to reach your goal. If you're truly coming up short on your goals, then there is a real question of whether or not taking more risk could help you catch up. Now, I've looked at some numbers, other people have done studies, and I've got a video on that, in fact, about whether or not taking more risk, doubling your returns, would save your retirement versus contributing more. Now, either one can be difficult to pull off, but I think you want to know those numbers. So yes, there's a decent chance that you would end up with more money at retirement and throughout your life if you take more risk. Don't make any decisions based solely off this video. This is just food for thought. I just want you to hear that it's okay if you're not interested in putting all of your money in stocks, your entire life savings. Instead, you can use different strategies to keep some of your money safe while investing some of the other money for what is hopefully good long-term growth. You can use bucketing, or you might try asset liability matching, or you might just pick an investment mix that you're comfortable with. I hope you found that helpful. If you did, please leave a quick thumbs up, and I look forward to talking with you soon.